We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I'm here today with Venkat Avasarala of Stryker Properties in Dallas, Texas. Venkat, how are you today, sir?
Doing very good, and thanks for having
me. Absolutely, man. We're always intrigued, and what little bit I learned about you prior to the show, as far as what the projects that you've got going on and the stuff that you have undertaken has just it blew my mind, really, and especially for somebody that came from an IT background like you said you did, and just all of that stuff that combined, and now you've got the assets and all that you control. Just anyway, I can't wait for the audience to get a piece of what you got going on there. So tell us a little bit about yourself, where you come from, and what you got going on.
So I came to US back in 2002 to pursue my master's in electrical engineering, which I completed in 2004. Before that, I was from India, South India. And after that, couldn't land a job, an entry-level job in electrical engineering. So I ended up in IT and spent 14 years of my corporate career in IT, worked for several Fortune 500 companies, and then started doing commercial real estate as a side gig back in 2016. Summer of 2016 is when I really get started. But 2 years into the commercial real estate, it wasn't a side gig anymore. The business really took off, and I had to make a decision. Do I want to do it like with my full time, or just don't add any more side gigs kind of situation? So I chose real estate over IT. It was an easy decision. So basically, I resigned at the job. At the time, I was working for Bank of America. I loved working for them. Nothing wrong with the job or anything. It's just that a real estate business seems to be like really good, and it gives me my financial independence. So I chose to go with real estate, and eventually ended up buying about 3,500 apartment homes, not the single family kind, in mostly in DFW, because I live in Dallas, mostly in DFW, but I have some units still in Arizona and Colorado as well. And I try to buy in the major metros. I don't know very much about these tertiary and secondary markets, so I try to stick to the primary markets that I know. And after COVID, I made a quick decision to offload most of our portfolios. So I ended up selling about 3,000 of the 3,500 units. And I still have 500 units left. But since last 2 years, just before COVID, is when I set my sights on ground up development. Didn't know anything about ground up development early 2020, but at the moment I'm developing about 2,000 units actively and another 2,000 units in pipeline, meaning I secured the land. It's either under ownership or under contract. So those 2,000 I'll break ground in about 18 months to 24 months, but the remaining 2,000 are actively developed, meaning I already broke ground or I'll be breaking ground in next 6 months.
Wow. All right. So that's now the listeners have an idea of why I was so intrigued with what you were telling me. So let's unpack that just a little bit at a time, and so what year did you say you sold out of the 3,000 units and kept the 500? What year was that?
Last year,
Okay.
2021.
All right. And then that's when you cycled into ground up development, right?
Even before that, right? I try to overlap these things because when I'm trying to pivot away from something, I'm constantly like that, right? So when I graduate in electrical engineering, when I couldn't find job in electrical engineering, I didn't wait around too long, and I took the next best thing, which is, for me at the time, it was IT. And I was doing IT, minding my own thing. I even have some single family rentals and all that. Nothing much. I don't even know how to do rehab on them, so I bought already pre rehab homes. I had 20 of them. So I pivoted from there into multifamily ownership, and from there to development. So every stage I do these things in an overlap phase. Maybe just put 1 feet in there and see how it is, and before you put the second
Yeah,
foot.
yeah. Well, what's so interesting, and I'll tell you, because I've been involved in some building, and I've been involved in just some single family building, and it's always a challenge, and it seems like every year that goes by, the challenges just change, and then the challenges become, whether it be supplies, labor, which of course supplies and labor has been a big thing here recently, and as of the recording of this podcast in what is this June. Um, Supplies and labor are just, they're hit and miss. um, but so tell us about the first, like, okay, so you acquire the land, you maybe sell off a parcel or two with zoning so that you can kind of control a little bit about what goes there and so on. What's the first step after acquiring the land well, like, what's the next step?
So a lot happens before acquiring the land, right? Once you acquire the land, you're already like 60% into the momentum there,
Okay.
right? I mean, there's no turning back at the time. So as soon as we laid, first of all, you got to get your box, right? My box is this: I want to build in Dallas, Austin, and Phoenix. These are the only three cities that I'm actively looking. I'm not looking anywhere else. I'm not talking to brokers anywhere outside these three metros because look, I mean, I only have 24 hours and I cannot just spread myself too
Yeah.
thin. I want to have in expertise in certain markets so that when an opportunity comes up, a light bulb should go off in my head and it's like immediately jump on it, right? And I cannot do that in all these markets. There's so many different markets like your Nashville, Atlanta, Orlando, Tampa. All these are spectacular markets, and anybody can do really well in these markets. But it's just that my personal limitation that I can only do these three markets, and then my land has to be close to a major highway so that people can get in and out, and should be well placed in a metro so that no matter which direction your job is, you should be able to go. But if I buy something like so far flung to the, let's say, west of or Dallas, yeah, probably you can drive 10 miles, 20 miles east, but that's it, you're limited there. But if you buy something more central, that would allow investors to go in any which sorry, tenants to go in any which direction to work. That's another thing. And also I look for $2 rents, and like you were alluding to earlier, I mean, it's very expensive to build right now. Gone are the old days where you can build something for like 75 bucks. I mean, in 2006 I bought my home, and I got the home, 3,000 square feet home, 3,500 square feet home, at $70, $75 per foot, all in cost. I mean, that's what I paid for the home, and this is in Plano, which is a pretty nice area in DFW. But gone are those days. Now the hard cost on apartments is just $150 a foot, just for the third three-story walk-up.
Mm.
There's no concrete structure, nothing. But if you want to put a four-story walk-up, four-story concrete structure like a wrap product, that's like $200 a foot. And that's Dallas. I mean, if you go to Phoenix, it's at least 15 to 20% higher, these numbers, right? Because that market is much more stretched
So
with the labor.
I know it's it may be a minute fact or a minute answer to this, but what's the difference? Why so much more 3 story versus 4 story?
So the concrete structure. So when you go three-story, you're parking on the ground. You're not erecting any structure to parking. There's no garage. It's just people park on the concrete right there on the grade. But when you go into the wrap product, now when will you buy wrap product? When the land is very expensive, or if it's an infill location or something like that. I'm doing a project in Frisco downtown. People who knows Dallas understands Frisco is like our second downtown to Dallas. Pretty posh area, and I got a 7 acre piece right in the middle of Frisco downtown, right next to Toyota Stadium. It's pretty penny for that land, so you cannot allow people to just park on the street on the grade. Then so you should build a garage, 3 4 5 story garage, and then that's that many layers of concrete that you have to pour with everything and wrap the buildings around it. So that is what's making this whole thing expensive.
Gotcha. Okay. Well,
That's about $20,000 per spot. That's thumbnail. Give or take few thousand dollars, but at $20,000 for a parking spot.
that makes okay. Yeah, 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 yeah. It makes sense. It makes perfect sense. All right. So when we're looking at, all right, I want to talk back up just a little bit because obviously you're going to sell off some of the parcels and get your basis back out of the ground. What does the meeting like the city and all that kind of stuff involvement in getting the zoning and all that done? Obviously, like you said, you've got your momentum going into it at like at closing of the actual land, but obviously some
Yeah.
of that other stuff because like I'm sure you've signed an LOI, you've got
Oh, you then the metro starts running, right? So the moment you sign the LOI, you gotta hire an attorney, obviously, right, to pay them to write the PSA. I mean, you'll start spending money until the moment you get out of the contract. I mean, should you have to, right? So basically, you started ordering things like survey, geotech, where they measure the strength of the ground, if we can hold the weight of the project and things like that, right? And then any flood study, environmental, and then you go into offsites, right? I mean, do you have to do any offsite improvements? Meaning, is the water right there, or do I have to bring it from somebody? If yes, from whom should I get the easements? And if yes, how much will it cost? Is it a 6-inch line or an 8-inch line? I mean, it's just and how much does on a cost? Same thing for sewer. Is electric already there? Usually, 9 out of 10 times, electric is always there. Never gives a trouble for us. We may have to increase the pipe, sorry, the wire. We may have to replace some wire, but otherwise electric is not a problem. But sewer and water most often are an issue if you, especially if you're going to the suburbs to develop. Not an issue if you're in the infill location. Infill location is a piece of land which is already established. Now the biggest problem with infill locations is detention. That's a huge problem. Let's say if you go to suburban, you got a big piece of land. There is a piece of land I bought this March in a town called Salina, just north of Frisco. No problem. How much detention you want me to carve it out? Okay, I carve it out. There's plenty of land to go by. Okay, no problem. But last year I was working on a piece of land, just a 2 acre piece of land, very expensive piece of land, right next to Galleria Mall in Dallas. And after 6 months into it, after burning $80,000, I had to just walk away from the deal because the detention killed the deal. City asked us to detain water, and there's just not enough space for me to build that underground detention, and I could make that thing work. So every piece of land will come up with its own opportunities, own challenges. So as times goes by, as you accrue the experience, you know where to which projects to swing at, or which projects you just let
is
go.
there an initial is there like an initial due diligence that
Hmm.
like obviously I'm sure the due diligence comes in phases because you don't want to just jump right in on us to a surveyor at the very beginning and start spending that kind of, but so I mean what are the initial due diligence?
So before we write LOI
Yeah.
itself, we need to know if the property is feasible, right? Assuming everything else will work out, is it financially feasible? So we do a full underwriting, do the market study in CoStar, and get the rents, and we talk to our GC from time to time to get the latest what they're seeing on the hard cost, which is very volatile, which has been very volatile since last 2 years. So if your GC gave you a number 2 months ago, may not be accurate anymore. It may have gone up or down a little, but usually up.
Yeah.
So we get the numbers, fresh numbers from GC, and we underwrite, and let's see, we want to generate this many IRR to our investors. Okay, does that still leave us enough for the GP? If yes, if it's financially makes sense, then we'll go ahead and write the LOI. But once the LOI is accepted and once we put the PSA, yeah, we do a full scale due diligence, because once you close the land, you're stuck with it. I mean, there's no going back, right? Um, and sellers are charging per unit. Gone are the days where they want like $5 a foot, $6 a foot. That's over, right? So let's say if somebody has a piece of land, just 1 acre land, and you can only build, let's say, 15 a unit, 15 an acre, they will charge you 15 times, let's say 25,000 a unit, or 30,000, whatever it is. But let's say if you have a piece of land in infill where you can build 70 an acre, right? Maybe there's no restriction on how many units can build. Then you have to pay for 70 units, even though the amount of the land is exactly the same, an acre. So that's why I say that all these due diligence items has to be checked out beforehand before you actually close on the land, because after you close on the land, the only thing you should be doing is actually taking the site map. And one other thing, before you close the land, you got to take the site map. So you hire an attorney and have them draw a site map, right? Showing the land utilization and all that. Use the codes, right? City codes and setbacks and all these things. And then you show it to the city before you
Yeah.
close. So you set up pre-development meeting with the city and you sit with them and review the whole thing. If there are any surprises, they'll come up then. And some people just don't go until after the close, and oh my god, horror stories. You gotta talk to city, and just because PD says something, the documents, it doesn't mean anything. You gotta hear the from the horse's mouth that, look, this is what I'm trying to do. Are you in support of
Yeah, it
this?
seems like the quickest way to get into a lawsuit is just exactly that right there.
Yeah.
You assume. Um,
No, it's like some cities are very heavy-handed. Like their city managers, development services. I mean, they've been in that job for last 20, 30 years, and practically they can do whatever they want and they get away with it. Not saying that every city would do that, but we have seen enough instances. So that's why I don't pay a lot of attention to what's written on the paper, but rather I go talk to the development services. It's like, well, look, I mean, that's what the paper said, and that's why I drew this. How does this
yeah,
look?
yeah,
Is this in line with the objectives that you have for your city? If not, how can I change it to make it better to your
yeah.
satisfaction? Right? I mean, that's how the conversation has to go.
Well, and that's yeah, and it just seems to me like, I mean, you're talking almost a foreign language to a lot of, unless you're in ground up development. I mean, it's a foreign language. I mean, it's something that somebody could lose their rear end on real quick if they went in there and could get taken advantage of by buying a piece of land you think is a decent deal, and then come to find out, like you said, you can't put underground detention or whatever you're going to put in there. But detention is a big cost item here as well, as far as like the engineering of it and all, and of course it takes up.
And sometimes it's as trivial as this. Actually, this deal that where I lost 80 grand, there is plenty of detention, right? I don't have to detain any water, right, in that particular case. However, the water that will leave from my property will go through a small culvert, and it has a bottleneck. It cannot let a lot of water. So what city is saying that we'll take all your water. You don't have to detain it, just retain it and release it
Yeah, well,
slowly.
you might as well, then that's retention. I mean,
I mean, right? I mean that came out of nowhere, and 6 months into the contract, it came and killed the deal for me.
how long do you see
And
these
these are,
contracts usually last? Are they how long is the option to
usually,
buy?
yeah, I mean, see, unless you run into any problems, at which point you have to go ask for more DD time. But if it's a pure straightforward site, 60 days, slightly complicated, 90 to 120 days. But if it's really complicated, and especially if you're working with big cities like Dallas are getting ready to fire their city manager because their permitting was so bad. And I felt really good because the reason is this. As soon as you put the land into contract, I asked for a pre-construction meeting, and they gave it 120 days out. Had I had that meeting early on, I would have had a lot of time to do something about the problem. But I got that meeting so late, and I'm so close to the due diligence, and I just didn't I ran out of runway basically
Yeah, yeah, yeah,
because this
yeah.
not long.
And you got to imagine that then at least the current owner of it now, I guess they get to use some of that information, and they can
Oh
push
yeah.
forward whatever objectives they want to have with it. So interesting. Now let's shift the conversation a little bit to capital raising. And I know you and I talked a little bit about some of the people you were reaching out to get capital and so on and so forth. But are you doing mostly 506B or 506C?
5 or 6 B.
So there are people that you have a relationship with or had a relationship with.
So the thing is, like, I never advertised and never and not planning to advertise. And I just don't want to create a big hurdle of, like, people having to disclose their assets and all to even to a third party, right? I don't want to put them through that, especially given that I'm only working with the people I already know, and my investor database only grows with referrals. If somebody refers somebody to me, it grows. Otherwise, it
Yeah.
doesn't.
Well, and that gives you a little bit of
Um,
control over who you let in your deals too, and
uh,
you don't just have to, because a lot of times, because all investor money is not created equal, and I say that all the time on this show, and it's sometimes when you run across people that want to be, they're going to be in an LP position, but they're bred for GP response. They're bred for GP position.
yeah.
Then you could lead you to some argue.
No,
It's just
you just have to set the right expectations. Obviously, that can happen with anybody. So as long as you set the right expectations from day one, and I offer people to co-GP opportunities. If somebody wants to co-GP with me, I said that, look, either bring the deal or equity. You bring the deal, I'll bring the equity, or I bring the deal, you bring the equity. I mean, you got to pull your way in. There is no free lunch here, right? I mean, everybody has to
that's
pull
right.
their own weight. I provide plenty of co-GP opportunities for somebody who wants to come in that role.
Yeah, yeah. Now, when you bring an investor in on your deal right now, what do you usually like? What's the time frame before distributions start? Because a lot of the things, the ground up stuff that we've seen, I mean, you could just be talking 2, 3, 4 years before.
Absolutely. So I think, the whole investing community has been brainwashed into thinking in a certain way, which is cash flow, right? Cash flow is
Hmm.
king. Second thing is paying taxes is
See
evil.
that?
You got you shouldn't be paying taxes, right? So that worked. I mean, I was exactly with the same mindset when I started my single family investment in 2007. The very first day on my every rental I bought, it cash flows 15% cash on cash on day one. Otherwise, I wouldn't buy, right? That was those days. Everything was easy. Let's say suddenly a HVAC machine blows up, no problem. Plenty of cash flow, I wouldn't bat an eye, right? So everything was easy, but that's not the case right now.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
Right now is not the time to go find out the so-called cash flow because it's just not there. I'm not saying it's impossible, it's highly improbable to find something where which will have a durable cash flow that pays you every month and enough for you to continue that as a way of
Sure.
investing. And the second thing is this taxes, right? It's true. Yeah. If you can do depreciation and just offset it, sure, that's great. But I would challenge to people lately. See, this mindset changed last 2 years ago completely, right? I mean, my mindset changed that. Look, I want appreciation over
Yeah.
cash flow because everybody wants cash flow and it's a race to bottom. Five cap, four cap, three cap, two cap, one cap. Where would it
Yeah.
stop? Right? It's a race to bottom. I don't want to race in that. I don't want to participate in that race. I don't want no cash flow because people are racing to the bottom. I don't want to be in
Yeah.
the bottom. The second thing is taxes, right? So right now, 20% taxes on capital gains is a hell of a deal. I want to pay them right now while I can still pay at that rate. Why? Because the whole world is thinking about de-dollarizing, especially after the current administration kicked Russia out of the SWIFT and the dollars, right? So everybody's trying to de-dollarize. And if people stop holding dollars and dollar denominated assets, what will happen is the 10-year treasury T-bills will start go to 3, 4, 5,
Yeah.
right? And if you don't protect the dollar, people will ditch the dollar sooner than what they're doing
Yeah.
already. So dollar cannot be a worthless piece of paper. The whole world holds dollars instead of their own currencies, thinking that it has more value than
Yeah.
their own currencies. The Fed has no choice but to defend the dollar. So now, in this situation, if the treasury rates keep going up, the government cannot issue that debt anymore because they cannot service that debt, right? Because all these days we are doing all those wars, giving away free money and all that, because the whole world is subsidizing our irresponsible
Yep.
lifestyle by holding our paper and collecting peanuts in exchange, like 1%, 1.5%, and all that. Well, in future, I don't think they're going to do all that. So what's going to happen now is, I have two things has to happen. Either the government has to reduce their expenditure to balance the books, because you cannot issue a lot of new
Yeah.
debt because it's already at 5%, 6%, or you have to increase revenue. And I don't think they will decrease. Which politician do you know has reduced spending? Which one? I don't know any.
They
Right? I
always
mean,
say they're going
decline.
to. They always act like they're going to, but like you said,
There you
it's
go.
it's the world supporting our reckless lifestyle. I mean, it's just I had a conversation with my mother of all people not long ago, and it's like some days I feel like the Americans are the spoiled kid whose dad bought him a Corvette in high school, and it's like,
There you go.
just because everybody like they think our freedoms come and go with speech and whatever else, but it's really, I don't know, man. It's yeah, the
So that's what I'm saying. So that's why I suspect in about 20 years or even 10 years, our income has to go up, right? The government's income has to go up. That means taxation has to go up. And the very first thing they're going to come after is this 20% cap on the capital gains tax. So I don't want to defer this with 1031s and depreciations and all that. I want to pay them at 20% right now, so that I don't take my money to be make my money to be like a hostage somewhere, stuck in deals where I get 3% cash flow.
Mhm.
Rather, what I want to do is I want to make a dollar into two, two into four, four into eight, eight into 16 as soon as possible. And the way I chose is to develop. When you develop, you have your sweat equity, and your returns are much better than owning something existing,
Yep.
right? So that's the way I'm thinking, where taxes, not paying taxes, is not important to me. Cash flow is not important to me anymore, because that's not how these rich people are investing. The way I'm seeing, people are building stuff while there is still demand. After 10 years from now, maybe there won't be demand, where there is a not lot of need to build anything.
Yep.
So I want to make a wild sunshine, and before before we hit that equilibrium, yes, the interest rates went up, no doubt about it. For the short term, the single family will cool off, no doubt about it. But the demand is still there. We underbuilt for the last 10 years, and we have to make up for that now. And I want to do my part to fill that gap.
Yeah. Yeah. Well, and it's yeah, and like I said, we just don't have a lot of ground up developers on here, so a lot of this stuff is just it's so. And I know it's all things that we all, even as multifamily experts, I guess if you will, or self storage experts, if you will. It's we still we almost forget that whatever we're looking at was in this phase at some time ago. You know what I mean? And the way that stuff is appreciated, if you get in for the cost of basically the cost, like you said, 150 a foot versus having to go buy that unit at a 4% cap rate. I mean, what's your difference? Like, okay, if you have a ground up development right here that's going to be done in 5 years, or you have a 5% cap rate, same amount of units right here, what's the price difference? What's the value difference in the ones today versus the other versus the one that's going to be ready in 5 years?
So right now everything is selling at premium, right? Before COVID, there was a discount. I remember in 2018, I used to get postcards in the mail, where they used to say that, hey, one bedroom apartments, it's $1,800 rent, very nice area, but we'll give you a $2,000, like some kind of store gift card, like gift card,
Yep.
right? You come sign here and you pay us $1,900 in rent, we'll give you a $2,000 gift
Yep.
card. That was the case, right? Even 27 17 18 19, because the need was always there. Suddenly, aliens didn't descend upon our country and start demanding single families and apartments, right? That's not the case, right? It's the same people that the desire to have their own unit, their own house has always been there, but the money wasn't there, right? Where people can go out, the roommates can split, three roommates sharing a two bedroom or one bedroom, right? I mean, they don't have enough money to go rent three
Yeah,
separate
that's right.
apartments. But COVID came along and we sprayed money on everybody, right? We just sprayed.
Yeah.
The desire was there from before. Now I have the means to pay
Yep.
for it. Boom, right? The households got created. And also the COVID, right? People are afraid of dying or whatever. I mean, they want to distance, right? I mean, they want to stay far. And then people from these richer and these wealthier metros started descending upon our sun
Yep.
belt, like from both the coasts, and they brought in with them a lot of cash, a well-paying job, more than what a local person is making, so they're able to pay. And you know what happened to the
Yep.
rents, right? So the fact of the matter is, right now everything is trading at a premium. So if I'm building something for, let's say, $200,000 a unit, I can sell it for, because of the compressed cap rates and fastly escalating rents. I can sell it for in Dallas, even though Texas is notorious for very high property taxes, exorbitantly high property taxes. A lot many people doesn't talk about taxes, but it's ridiculous. Several times I considered moving out of state of Texas for that reason.
Seems like California.
Um,
That's what a lot of people do.
it's worse than California. It's worse than California because California, everybody pays their own income taxes. Texas doesn't have income tax, so the landlord's the only ones who pay taxes via very high property
Yeah.
taxes. Anyway, so even with this high property taxes and insurance in Dallas, you make about 60, 70, $80,000 margin per
Yeah.
unit, right? So that is the case. Now, a case for value add, I still see people, not value add, but people just buy some brand new product or a newer product, and making a case that, look, I mean, inflation is at 8.5%. We expect it to stay like that for a while. And let's buy this thing. Yes, we know it doesn't cash flow anything, but over the time, it just
Yeah.
appreciates. I personally have a hard time. I'm not saying that it's not true. I'm not saying that they're incorrect, but that's just too rich for my
Yeah.
blood. I don't want to depend upon the market to carry me so that I can make my numbers. Rather, if market helps, well, look, that's tailwind. Of course, I'll
Yep.
take that. But I want to go to work every day, build value a little bit every day, and make, and build wealth for me and for my investors by building something out of the
Yep.
ground. Right. So that is what I chose. But nothing wrong with the strategy. I mean,
Yeah.
especially
I
if you
mean,
are in
everybody
a
has their own profitable aspirations. So anyway, well, listen, Venkat, we're getting close to the end of our time here. And so there's a couple of questions that we ask every guest that comes on the show. There's no right or wrong answer. But the first of those questions is, what is the best book that you have either recently read or are currently reading?
So, honestly, the only one book that I have read from page cover to cover ever, other than my textbooks, of course, when I was a kid, right? I mean, those don't count. But the one book is by Dale Carnegie, written in early
Yep.
20s, How to Win Friends and
Yep.
Influence, right?
I
So
just saw that on my iPad
that
last night.
without that book, I wouldn't be where I am right now, because 2 years back, I don't know lick about development. And right now, I'm actively developing $500 million worth of projects and $1 billion projects in pipeline. And all that, I credit that book. It just teaches how to talk to people, how to build
Yeah.
true relationships,
Yeah.
and how to be right. Yeah,
And
I would say
it's
that
you
that is
you're
my.
you're a very charismatic individual. I mean, you really bring a lot of jazz to the discussion. So I think that's definitely right up your alley anyway. So it's no wonder you've kind of connected with all those people at that level and been able to move them forward into investing with you. So all right, what is a dream vacation that you have either taken or hope to take?
Well, it's my very first vacation. See, I came to United States in 2002 and been just working or going to school until 2013. So forgot to take vacations until 2013. So I went on by 11 years without taking a vacation. So the 2013, the very first vacation I took was to Rome. and nothing came close to that ever again. I went to 30 countries after that, all the way from Portugal to Russia
Yeah.
and several places in North America, Caribbean, all that, but nothing came anywhere close to the Rome. It's a magical
Yes, it is
place.
very much so. Is my wife and I were there just a few months back, and it's
Oh,
we started in Milan, went to Florence, and then ended up in Rome, and then flew home from Rome. So
nice, nice.
very beautiful country. The whole country of Italy, just unbelievable. So, all right, well, good. Well, listen. So, if the listeners heard something that resonated with them, and they'd like to maybe reach out and get in touch with you, what would be the best way for them to do that?
Well, they can um, reach out on my email, Venkat, Venkat, at Stryker Prop, STRYKERPROP.com, or my phone number is 281-727-9253.
Cool. All right, man. Good deal. Well, I want to thank you for being on the show today. I know it's always good to get somebody that's got a new perspective or a new angle at this whole real estate thing. So, listeners, if you like what you heard today, shoot down there, give us a 5-star review, and hit that subscribe button. And Venkat, thank you so much again. I really appreciate you taking the time to be with us, and I hope everybody has a wonderful rest of the day.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.